Ausnahmsweise mal geht es nicht um Gold und Silber, sondern es geht um Öl und Gas mit Africa Oil. Und bei mir ist Shahin Amini und wird jetzt die nächsten 15 Minuten auf Englisch präsentieren. Danke.
So my name is Shahin Amini. I'm Head of Investor Relations Communication for Africa Oil. So it's really my pleasure to stand here and try to do the best job that I can, because Africa Oil is the lonely voice here for oil and gas. So I'm here to talk about gold, but not the shiny kind. I'm here to talk about black gold, the commodity that is driving global economy, and it still accounts for the majority of our global primary energy needs. So we are a publicly listed company, and of course, as always, it is important to give you a disclaimer that what I will be using in this presentation is forward-looking statements, and these are true as of today, but of course there is no guarantee that we can achieve these results in the future, so important disclaimer. So, Africa Oil, what is the company about? The clue's in the name, Africa Oil. So our focus is on the African continent. We are a Canadian company, dual listed on Toronto Stock Exchange and on Nasdaq Stockholm. So we have large investor base in the Nordic markets and in North America. On this slide here, you can see our asset footprint. We have 4 major countries, our core operational areas. The beating heart of the company is Nigeria. This is where we get our cash flows from. So we have 3 producing fields, and I'll come to those with more detail in due course. That is our primary area. We are also active in Equatorial Guinea, where we have exploration activities for oil and gas. We are also in Namibia, which is actually very exciting for the international oil industry. There have been some big discoveries there, and we have an interest in those. And we are also in South Africa. So this is a map of offshore Nigeria, where we have 3 assets, 3 producing fields. These are in deep water, and they're way offshore, so they're more than 100 kilometers from shore. So we don't suffer from some of the issues that you typically have in Nigeria, you know, people damaging pipeline to steal oil or kidnapping. Because we are way offshore, we've never had any issues with the production of our assets. Now, these are very large assets. Each one of these fields, at its peak plateau, was producing 200,000 barrels of oil per day. And the 3 fields where we have an economic interest account for the 3 top 5 fields in Nigeria. So these are strategic. Who are our operators? These are Chevron of United States and Total Energies of France. So we are in assets that are material and meaningful for super majors. So look, we've bought these assets. We closed the deal to buy our share in these assets in 2020 for $520 million US. And over the last 5 years, we've taken back $850 million. So these have been fantastic investments for the company. And looking back, the internal rate of return on this investment is 35%. And we still have a material reserve-based, production-based, cash flow-based to help the company move forward and grow and deliver shareholder value. So these fields have already produced around 2.3 billion barrels of oil, but there's still about 1 billion barrels of oil left. So these are still very material. And one of the good things about this is because there's been years of production history, there is no more surprises in the subsurface. We know these assets very well. And they have very low operating costs. So to lift, the lifting cost is only around $10. With royalties and other costs, it goes up to about $15. But even in a low oil price environment, we will still get very high netbacks and profit margins on these barrels. And if you look at, sorry about that, if you look at the chart at the bottom of that slide, you can see that most of the capital expenditure on these assets have already been spent. So we don't have to put $1 extra in these assets. The production, the cash flow looks after its own, and we just basically use this. I don't like using the term, but it's almost like a cash cow. We only take money out. So that's our production base, the beating heart of the company. What about the exciting upside? Where could the future growth come from? So we are active offshore Namibia and South Africa. There is a basin called the Orange Basin, and this has really become into focus for the international oil and gas industry, because back in 2022, just a few years ago, TotalEnergies and Shell discovered large oil fields. And on that slide, you can see those green are the outlines of the oil discoveries. And these are on such a scale that are material for companies like Shell, Exxon, Total. And we are there, okay? We're a small, I suppose the analogy I use is that, let's take a footballing analogy. We're not a Bayern Munich, we're a much smaller company, but we still have these assets and we are benefiting because we have those large premium companies taking these projects forward. So what do we have? Offshore Namibia, we have through an invested company called Impact, we have an interest in a field discovery called Venus. This is fully appraised, and TotalEnergies have guided that it could make the final investment decision in 2025, and first oil from this field is expected in 2029. Now, it's going to cost billions of dollars to develop this field, and our interest is around 4%, still meaningful for a company our size. But the great thing is that we did a very good commercial deal with Total, and through this deal, Total will pay for all the development capex until first oil comes on. So we don't have to worry about funding these assets. It's almost like in an autopilot mode. Further south, in South Africa, the same basin, Orange Basin, but in the heart of it, on the South African side of the maritime border, we have this large block, 3B/4B, which is on trend with the discoveries further north, same geological trend. And we actually have a much more significant interest in this block. We have 17%. It is exploration, so we need to drill those exploration wells to see whether we have the same oil fields that we've discovered. The trend continues down. And we are going to drill those next year. The wells are very expensive. Each well costs around $160 million just for one exploration well. Are we going to pay for it? No. Guess what? We did a commercial deal with TotalEnergies. Total will pay our share for that, so we don't take the risk. If there's a discovery, great. If there isn't, we haven't spent our share of that $160 million, which would be significant for a company our size. So I suppose where we sort of differentiate ourselves is through these very creative commercial deals with much larger companies. We explore with other people's money. That's our motto. So that's Namibia and South Africa. As I said, there are near-term catalysts. In fact, right now, we're drilling another well on a target called Tamboti to the north of Venus. That well is currently drilling. And the CEO of Total, Patrick Pouyanné, a few weeks ago did say that is targeting 1 billion barrels of oil. So if it's a commercial discovery, it is very large. In the industry, they like calling it, it's an elephant. So it's a very large target. And as I mentioned earlier, we expect to be drilling on 3B/4B in 2025. So a near-term catalyst for the company. So moving on, there's a lot of detail on this slide, so I don't want to bore you with it. What is it telling you here? So basically, we have very good assets. They're world-class, they are large, and we own a part of it, but there has been complex asset ownership. So over the last year, we've worked very hard to simplify the business structure and also to get these commercial deals done. So that offshore Namibia, we don't have to worry about funding those expensive developments. We did those deals. So the 2024 has really been about commercial delivery, and we've done a great job. Another deal that we've done, which we expect to close in first quarter of 2025, is that on Nigerian assets, we own our interest through a 50-50 JV company, and we've done a deal with the other shareholder in that company to roll up the 100% of that company into Africa Oil. It's going to double our production, double our reserves, and that shareholder becomes a new major shareholder in Africa Oil. So they get shares at the corporate level in Africa Oil. Now, the great thing about this new shareholder is it is a Brazilian bank called BTG Pactual, so they have a lot of financial firepower. Why are they doing this? Because they have long-term interest in investing in oil and gas. Now, I know I'm standing here in Germany, and there are a lot of skeptics. What is the future of oil and gas? You may disagree with me, but at Africa Oil and with our shareholders, we believe that the energy transition is a multi-decade journey. It's not going to happen overnight. In the meantime, the world needs the commodity that we produce. And over the next few decades, there's going to be fantastic opportunities for investing in oil and gas. And BTG want to use Africa Oil as a vehicle for expansion and for investment. So we are strategically aligned to grow our business. So this slide really also is the fruit of our labors over the last year. The dark bars show our production outlook from Nigeria. So you can see that there is a decline, and then we have another undeveloped field, which comes on stream in 2027, 2028. So there's a step up in production, but then we go back into decline. 3 minutes. So effectively, Namibia backfills that. And that is the great thing, that we have Namibia coming in, and so our long-term production outlook is secure and it's all funded. On the NAV, so this is our valuation. Our market cap is $600 million, and we are trading below our core assets. So the Nigerian producing assets, independent valuation, $660 million US. Our market cap is below that. So my proposition to you is that Namibia, South Africa, is all free options for you. So if you buy our stock, you get that for free. You only have the upside to think about, and the downside is protected by the Nigerian assets. So capital allocation, we like giving money back to our investors. This year alone, we paid $63 million. We gave it back through dividends and share buybacks. Our market cap is 600 million. So 10% of our market cap was returned to our shareholders this year. Well, dividend, we have an annual dividend of $23 million. Once we close the deal for that JV that I mentioned, we are going to increase the dividend next year to $100 million base. And there will be scope for further special dividends and share buybacks. And the company is in a great place to look for new business development opportunities with the support of our new strategic investor, BTG Pactual. So to conclude, what is Africa Oil is about? We have the benefits of high netback production offshore Nigeria, the beating heart of the company. It is allowing us to pay dividends. It's paying for other opportunities organically. And we have a lot of that, as you've already seen, in Namibia and South Africa, as well as Nigeria. We want to continue with our commitment to our shareholders, continue with the dividends and buybacks, and we are well placed with a very robust financial position. We've got very low leverage. We are positioned to be a consolidator in the oil and gas space. So thank you very much for your attention, and that's Africa Oil. Thank you.
Thank you, Shahin Amini.